Patent valuation. Techniques for assessing the market value of a patent under various scenarios. Let's define value as the price that a ready, willing and able buyer is prepared to pay in cash money to acquire the patent today. And let's not fall into the trap of confusing the value of a patent with the value of the business that owns the patent. If you look at the Silicon Valley Business School's slideshow on company valuation, you'll see that the value of a company is driven by numerous factors. The patents and intellectual property held by the company can have some bearing, but alone do not determine the value of a business. Of course, if the business has no assets other than the patents it holds, the patent value will determine the value of the company, as the patents and the company are one and the same in that situation. Note, although we might be able to estimate with some accuracy what the market price of a patent might be, there's no guarantee that a buyer is ready to acquire the patent today. Each patent is unique, and matching that individual patent with the interests of a currently active buyer is not easy. Buyers sometimes lie dormant until they find themselves involved in patent litigation. Then they suddenly start shopping to support their legal efforts. So there may be no buyers for a patent today, but a buyer may become active tomorrow, and the sellability of a patent can be somewhat unpredictable. A patent is a right to exclude others from practicing your unique patented invention. The patent claims form a fence around your property, and the publishing of the patent creates a keep out sign, preventing others from entering. If someone enters, they're an infringer, and you have the right to sue for damages in court. Some patent holders are surprised that a patent does not automatically provide them with the right to practice the invention themselves. The reason is that patents overlap, and components of one patented invention may infringe those of another patent. If you owned the patent to a bicycle, for example, you may be restricted from making, using or selling a bicycle because the wheels are patented by someone else, and the patent holder would have the right to ask the court to exclude you from infringing their wheel patent. Remember, a patent is merely a right to ask the court to exclude others from practicing your invention. The remedy protecting against future infringement can be an injunction, and the remedy for past infringement is the award of a reasonable royalty payment from the infringer. To understand the value of patents, it's important to recognize that patents are weapons of litigation. The trade in patents is driven by patent wars, litigation involving large, deep-pocketed corporations. A common scenario, often stimulating the trade in patents, involves competitor A filing a patent infringement suit against competitor B. B then buys patents to sue in counterclaim against A. Some buyers acquire patents for the sole purpose of litigating against a target company, but patent purchasing can be for defensive purposes. If B holds a large cache of patents, each aimed at competitor A, then A might be reluctant to launch an attack on B in the first place, in fear of triggering a countersuit. So holding patents can deter litigation, but the patents held must be infringed by the opposing party if they're of any strategic value. Infringement of a U.S. patent involves all the elements of a claim being found in a product shipping in the U.S. marketplace. Buyers are primarily interested in issued United States patents. The primary reason for this seems to be the tried and tested legal framework in the United States federal courts and the scale of the royalty awards that result from infringing products shipping in volume in the large U.S. market. Pending applications, patent applications not yet allowed by the Patent Office examiners, are considered too speculative to value until the claims are allowed. Although it's very rare for a pending application to justify any value at all, The pending applications are often sold bundled together with issued US patents comprising related portfolios, and they can boost the price paid for the issued US patents in the bundle. Patents issued in other countries outside the United States are also often sold in families together with their US counterparts. However, it's somewhat rare for these non-US patents to sell on their own. The sellability of non-US patents depends on the legal framework of the country of issue and the scale of royalties that might be awarded in that country's courts. Large markets like Japan, Korea and China are starting to see some trading of patents, although the scale is very small relative to the United States, as the legal frameworks in these countries become more sophisticated and more appealing to patent litigators. Non-US patents may become more valuable in future. However, today as a general rule, buyers will acquire pending applications and foreign counterparts bundled with US patents, but have no interest in buying these assets standing alone. The market forces of supply and demand have an impact on the price of patents as they have an impact on the price of any other goods. In this market, the patent is unique, so supply is somewhat constrained. Demand is also constrained. Usually the number of buyers is either 1 or 0 for a particular patent at a particular time. However, if several bidders can be brought to the negotiating table, the maximal value will be achieved when the seller engages in an effective sales process with several competing buyers. More buyers obviously supports a higher price, but this is most effective when the buyers are bidding within the same time frame. Auction fever can take hold, and decisions are sometimes made by buyers that are irrational and based on a desire to win the auction and beat the competing bidders. However, this is highly unusual, and patent purchase decisions are usually made by lawyers based on the rational valuation metrics that we'll discuss in these slides. In recent years, several live patent auctions have taken place. Unfortunately, the results have meant that the vast majority of lots remained unsold at the end of the auction. Most lots failed to attract any bids at all. Perhaps this reflects the fact that an auction requires 2 or more bidders in the same auction at the same time. As the number of buyers for any one patent is usually 1 or 0 at any particular time, and the buyers are reluctant to disclose their identity and bid in public, patent auctions have not been perceived as effective channels for selling patents. Before we proceed to review the factors considered and the calculations made by patent buyers, let's jump to the final result and explore the prices that are actually paid on the market today. Category A, at the bottom of our triangle, refers to patents that are invalidated or have expired. These patents are worth nothing. As a previously valuable patent may be invalidated by the discovery of prior art, this means the patent is somewhat fragile and can lose value, and the value can basically evaporate overnight. Category B sees a large number of patent transactions. These are generally patents that have not been litigated, so they've not yet been validated by the court. They have no licensing revenue, and the claims are not particularly broad. These patents sell for $20,000 or $30,000 each. If the patent has broad claims and the potential market is large, as in Category C, the value might be increased to something in the region of $70,000, $80,000 or $100,000 for an issued US patent. In Category D, you can see that patents that sell for 6-figure sums generally have several competing buyers pushing up the price, and evidence of infringement in the way of claims charts mapping the patent claims to features of shipping products. Million-dollar patents in Group E are very rare. But this price is sometimes justified where the patent has been successfully litigated in U.S. federal court, it's won substantial damages, and evidence of further infringement can be found in products shipped by large Fortune 500 companies. Such patents, reading on industry standards with heavy infringement, can justify values measured in millions of dollars. Now let's see how these values are justified. Patents are valued in at least 3 scenarios. In some situations, the cash flows that might be generated from the patent are known or readily determined. In other situations, the ability to generate royalties from patent licensing has not been investigated. Patents with unknown licensing potential is a scenario referring to the value of a patent where the potential licensees have not been identified and the licensing potential is unknown. Patents with existing licensees refers to the net present value today of a patent with ongoing revenue from licensees already under contract or court mandate to pay royalties to the patent holder. In the scenario of the patent with identified potential licensees, the valuation involves a calculation of the net present value today of a patent where potential licensees have been identified and evidence has been gathered that such potential licensees are currently practicing the invention or planning to practice the invention in the near future. In the scenario where the patent has existing licensees, the licensing agreements have been contracted and the buyer is acquiring the right to collect the pre-agreed licensing revenues. The value is determined by calculating the net present value today of the licensing royalties that are expected to materialize in future. A discount rate of 10 to 20% per year is applied to reflect the fact that patents are often invalidated and reflect the risk that licensee will default or payments will not materialize as planned. It's important to remember that the cost of running the licensing program and collecting royalties must be factored into the calculation, and the buyer is looking for a profit margin on the purchase. So after the net present value of the licensing royalties have been determined, the cost of running the licensing program should be deducted and the value is then reduced to allow for the profit margin of the buyer. In the scenario where the patent licensees have been identified, but license agreements have not been agreed, the potential cash flows projected from running a licensing programs can be estimated, and the value of the patent calculated by discounting the future cash flows to a net present value today. Evidence of infringement is necessary to identify potential licensees, and this is gathered and presented to buyers in the form of claims charts. Claims charts map the features of the infringing product to each of the elements of a patent claim. The value of the patent is determined by modeling a potential licensing program. This involves estimating the costs as well as the revenues that might be generated after infringers have agreed to pay the licensing royalties. It's fair to assume, as this is normally the case, that the licensee will refuse to pay licensing terms until they see a credible threat of legal action. They will license the patent if they're forced to by the court. There may be some situations where companies volunteer to pay a license fee, but patent buyers have learned to plan on legal action in order to force the licensee to pay royalties. The buyer calculates the cost of a patent infringement lawsuit and estimates the potential recovery if the lawsuit is won. As these lawsuits take several years to proceed through the courts and often require a subsequent appeal before the matter is settled for good, the buyers estimate 3 or 4 years before the licensing revenues start to flow. Bearing in mind that prior art is researched thoroughly by the defendant, and around half the patents that are litigated are determined by the court to be invalid. The risks associated with patent litigation are substantial. For this reason, the buyers apply high discounts to the potential cash flows that might be recovered, often using discounts in the range of 20 to 40% when calculating the net present value of the licensing project today. Of course, the cost of legal fees to bring the litigation have to be deducted from the funds recovered, and the legal fees anticipated by the patent holder are often in the region of $2 to $5 million, depending on whether the case goes to appeal or is settled at trial. So the costs are deducted from the royalty that might be recovered in court, and the total figure is discounted to its net present value today. Then the buyer will apply a further discount to allow for its profit margin. If the net present value of the licensing effort is calculated at $2 million, the buyer may offer a price of, say, $1 million to allow for some margin. These calculations are often performed by patent buyers involved in patent licensing programs. Taking the volume of infringing products shipping in the marketplace and an estimate of a reasonable royalty that might be awarded by a court, the buyer can estimate the potential recovery, model the costs and timescale of the lawsuit, apply a significant discount factor to reflect the level of risk involved, and produce a net present value of the patent today that will drive the price the buyer is prepared to bid. With legal costs in the $2 to $5 million range, clearly these licensing programs are only viable when the level of infringement and the potential recovery in terms of royalty payments is substantial. Often the buyers are looking for licensing opportunities that would result in licensing revenues calculated in 8 figures. Infringing products in billion-dollar markets, resulting in potential royalty awards in excess of $50 million. The vast majority of patents do not have existing licensing revenues and are not sold with strong evidence of infringement calculated in the billions of dollars. Often the potential licensees have not been identified, and another set of valuation metrics are used to assess the value of these patents. The value is calculated based on the average trading price of similar patents. If the average selling price is $80,000, a patent that's unusually strong may justify a value of $100,000, where a weaker patent might justify a price of $50,000. Several factors are considered by the buyers when assessing and comparing patents. In subsequent slides, we will examine the factors considered most significant by buyers. Perhaps the first factor considered is the validity of the patent. Issued patents can be invalidated by the courts, by the Patent Office, or they can expire through failure to pay maintenance fees. An invalid, expired, or unmaintained patent is worth nothing, so the validity and maintenance status of the patent are important considerations. A patent that has survived the litigation process, has been litigated and won, is most valued as it's been battle-tested. As around half of the patents are invalidated by the court during the litigation process, the ones that survive have been rigorously examined and are somewhat less likely to be invalidated in future. Every few years, the Patent Office requires a maintenance fee in order to keep the patent alive. If the maintenance fee is not paid within the deadline, the patent expires. Sometimes the patent can be revived if it expired through lack of maintenance fee payment, and there's a good explanation for the failure to pay the fee on time. But a patent that's expired and been revived carries scar tissue because the revival may be challenged in future, and this reduces the value. The effect on the value of a patent that's been declared invalid is terminal, as the patent is effectively dead and worthless. The effect on value of a patent that's expired for failure to make a maintenance payment and subsequently been revived is substantial. This reduces the value significantly. The claims define the scope of the patent, effectively forming a fence around the patented invention. A claim that's broad in scope, clearly defined and well constructed will attract a higher value than a claim that's narrow and ambiguous. A patent may contain a wonderfully detailed description and specification describing an important novel invention, but weak claims can render the patent unenforceable and reduce the value to nothing. After evaluating the scope and construction of the claims, the next consideration of the buyer is whether the claims are being infringed in the marketplace. If the claimed inventions have been incorporated into products without a license from the patent holder, the opportunity exists to assert the patent against the infringer. However, some claims are easily circumvented. A potential infringer could find a workaround, an alternative design that avoids the techniques described in the claims. A claim is restricted to a single sentence. This does not mean the claims are always short and snappy. Some claims comprise several hundred words. As a general rule, however, long claims are more easily circumvented and their meanings more easily disputed in court. Short claims are often the strongest, and the strength of the claims has a significant impact on the value of the patent. Claims generally cover either methods or apparatus. A patent with both method and apparatus claims will justify a higher price than a patent with only one type of claim. Buyers want to acquire clear title when acquiring patents. Encumbrances to clear title have a severe impact on the value of the patent. Buyers usually avoid patents involving a dispute over ownership, or a cloud of uncertainty as to whether the seller is able to deliver clean title to the buyer. Ownership disputes reduce the value of the patent, and often have to be resolved before the buyer is prepared to tender payment and close the patent purchase transaction. Existing licenses are seen as encumbrances to clean title. As we saw on another slide, a license that allows the buyer to collect royalties can add value and be seen as attractive to the buyer. But a license that has already been paid reduces the patent's value. The terms and scope of the license are important, as a licensed patent can be rendered worthless if the agreement provided sub-license rights to the licensee. The existence of licenses and other title encumbrances is important in assessing the value of a patent. The age of a patent is one of the factors affecting the price. The term of a U.S. patent is now 20 years from the filing date. Once it expires, the patent's value is zero, and a patent approaching expiration loses value in the final few years. However, after the patent has expired, past royalties can be collected, dating back to the time the patent was still in force. So the value of a patent with a good deal of historic infringement may not be badly affected as the expiration date approaches. Generally, though, a patent within a few years of expiration will see its value reduce severely and approach zero as the expiration date approaches. Although the term of a U.S. patent is 20 years, patents can spawn offspring, and patents that derive their priority date from a parent are sometimes issued subject to a terminal disclaimer. This means the child patent dies when the parent patent dies. Terminal disclaimers can have a severe impact on value, as they can force the early expiration of a patent. As terminal disclaimers are not always published on the face of the patent record, but hidden in the patent office filings, they can be somewhat difficult to uncover. The relative age of the patent, when compared to other patents in the same field, can have an impact on the patent's value, because a patent that's early in the field often has broader claims than those that are filed later on. Later patents are forced to fill the gaps left by earlier patents, and buyers have learned that earlier patents often have broader claims, and later patents often have narrower claims. The impact on value can be significant, but this factor really depends on the scope and strength of the claims. Forward citations are often considered as representative of patent value, and this is a factor that's sometimes considered by buyers. A forward citation involves a newer patent acknowledging this prior patent as prior art. The new patent basically recognizes the existence of the older patent and then distinguishes itself from the old patent in order to establish its own novelty and qualify for patentability. Forward citations show that the invention is somewhat relevant. A patent in a space without any other patenting activity will not be cited by new patents and will therefore have no forward citations. The value of the patent can increase with the number of forward citations. The relative impact on value can be moderate or significant depending on the reason for citation. If the patent has a very detailed description and specifications, it might be cited by patent examiners at the Patent Office and by new patent applicants. But the patent might have weak claims, so forward citations are unable to boost the value of a patent with weak claims. Of course, if the cited patent has strong claims, the forward citations can indicate significant value. However, the impact of forward citations is often overestimated. A patent with weak claims is of little value, regardless of the number of forward citations. Looking at a forward citation from the perspective of the new patent, rather than the perspective of the old patent, a forward citation becomes a backward citation. It's the same citation, but viewed from another perspective. New patents acknowledge prior art identified in previously filed patents. The new patent cites old patents and distinguishes from them in order to argue its own novelty to the Patent Office examiners. Backward citations can affect value in that they provide some evidence that the inventor researched the market and conducted some due diligence before finalizing the prosecution of the patent. A thorough list of backward citations reduces the chance of a patent being invalidated when prior art is later discovered. Backward citations can help determine novelty, but the relative impact on value is not significant. Non-U.S. overseas patents are difficult or impossible to sell on their own, but they do add value to the package when sold as a bundle with the U.S. counterpart. In other words, a U.S. patent sold with a family of international counterparts warrants a higher price than the U.S. patent alone. Generally, trading takes place in U.S. patents with international counterparts included. The impact on value depends on the countries covered. Large markets with strong patent assertion legal frameworks are more interesting to buyers and they justify a higher price. International counterparts included in the sale can add something in the region of 20 to 50% to the value of the US patent alone. A US patent sold in a bundle with similar patents and child applications can boost the US patent's value. As roughly half the patents subjected to litigation are rendered invalid when prior art or some other issue is discovered by the defendant, a single patent has a good chance of being invalidated when tested in court. The chance of a single patent being determined invalid is much higher than having a whole portfolio invalidated. For this reason, buyers generally look to acquire patents in families. A patent infringement suit involving 10 US patents is much more likely to succeed than a suit involving one patent on its own. On average, the rigors of litigation for a portfolio of 10 patents might result in 5 patents being invalidated, but 5 patents surviving and the patent holder winning the case. Assertion of a single patent runs a 50-50 risk of having the patent invalidated and the case lost as a result. The impact on the value can be significant. The value of a U.S. patent sold in a portfolio with numerous related U.S. patents can be boosted by 20 to 50%. On a related topic, sometimes buyers are more interested in the patent's children, especially live applications, than they are in the issued parent patent. A parent that has weak claims might be of little value, but if the child continuation application, deriving its priority date from the parent, is still alive, meaning its claims can be tweaked and edited by the buyer, the not yet issued application could be of some value to the buyer. There are situations where the buyer has no interest in the parent patent, but wants to acquire it merely to gain rights to file and customize child applications. So the existence and status of U.S. family members is one of the factors considered in assessing the value of a patent. A poorly constructed patent may be more readily invalidated or more difficult to assert against infringers. Best practices in patent construction can be checked and can impact the value of the patent. To reduce ambiguity and reduce the chance of the patent's validity being challenged in court, it's good practice for patent applicants to describe each of the terms found in the claims in the specifications. If the term is clearly defined, the court does not have to consider arguments as to what the term means. Likewise, figures, diagrams, can also help explain and clarify the written words in the claims. So issues of patent construction, such as the definition of claim terms in the specifications and figures, can boost the value of the patent. However, the impact on value is usually moderate to low. If the writing is unambiguous, even to a lawyer, the clarification in the specifications and figures may make little difference at all. Once the value of the patent has been determined, this does not mean that the patent is sellable today at that price. At the beginning of this presentation, we said that value is determined by the price that a ready, able and willing buyer is prepared to pay to acquire the patent today. If there is no ready, able and willing buyer in the market for this type of patent today, the patent is not currently sellable. In fact, the vast majority of patents are not sellable, even with the most effective sales efforts. If there are no infringers now, or visible on the horizon, buyers are reluctant to acquire. Generally, only the most valuable patents are sellable. Patents that are most sellable are found in areas seeing high levels of patent litigation. Patents are weapons of litigation, and patents covering mobile telephone handsets or LED TV technologies, where large corporations are actively launching lawsuits on a regular basis, are more sellable than patents in fields that see little or no litigation activity. So with the techniques and factors presented in this slideshow, we can estimate value, but this must be considered in conjunction with sellability and current market interest in the field of the invention.